Let's talk about how I lost $200 trading NASDAQ this morning. Now, during this trade, I do feel like it was a very beautiful trade. It just unfortunately didn't play out. And that's just how this strategy goes. You have a 30 to 50% win rate, so you're not going to hit every single trade. I know I say that every single video, but it's the reality of the situation. So if you can't handle losing sometimes, then you can't handle this strategy. So let's go ahead and jump into it straight to the daily time frame. Let me put the cam on. Boom. Okay. So here we are on the daily time frame. Okay. As you can see, let me see. Okay. We can turn off these SMTs for now. So basically what I want to start by highlighting here is we have this daily fair value gap above us. That for me today was my draw on liquidity. Now you can see we haven't quite reached it yet, but that was still my draw on liquidity. One of the reasons I was so bullish is because last week we had this previous month low down here that we came through, swept out, and got a very nice reaction off of it. So to me, that makes us bullish up to our next PD array. Obviously, based on PXL, PXH, the way that I find my daily bias, since we closed below this previous day low here, on the previous day, that would normally make me bearish down to this previous day low. However, since we had taken out that liquidity, that's why I was bullish. If we go onto the 4-hour time frame here, there's not too much to see. I just want to highlight that there's not really any gaps in here to the downside. But what we do have is, this 4-hour gap right here that price had respected once. It was already mitigated, but we were trading up through it before 10 a.m., right? So before that 10 a.m. candle close, we had traded up through it. But honestly, looking at it here, it kind of shows that we are bearish because we respected this gap. If we had inversed this gap, it would have been a much better thing to see, but unfortunately we did not. So that's one reason to say you should be bearish, okay? Now, a second reason to say that you should be bearish, although I wasn't, is because we have these relative equal lows right here. So this low and this low, boom, very nice equal lows to be targeting. And so that's pretty much the two main reasons that you would be bearish for today. And then I guess the third would be because of the PXL, PXH, you would want to see previous day low taken out, right? So your first target would be these equal lows here. Second would be this down here. Now, I was not bearish for the day, as I said, because I wanted to see price come up and tap into this daily gap. Now, what else is up here with this daily gap? If I turn on my indicator here, you'll see we have previous day high, which is, the start of that daily gap, okay? So along with that, we also came up in after market open and we put in this relative equal high for me. So it's not super equal, but it's relative equal high. To me, it showed that we wanted to see price come up to previous day high. We just failed to do it, so we had a failure swing. Now, this wasn't enough for me to say, okay, we're not bullish anymore. It was just, in my opinion, I was thinking at the time that we were just creating engineer liquidity so we could come back down, we could get a nice entry back to the upside, and then react off of this with liquidity already in here. It didn't make me think we didn't want to take this out. It just made me think, again, we were going to have engineered liquidity here for us to sweep into this daily gap so we can continue back to the downside after we hit the gap. So going back down, let's see, market opens right here on this vertical line where my mouse is. But basically what I was seeing here is on market open on the 5-minute time frame, we just went straight up and we front ran that previous day high by, let's see what it was, about 27 points. So for me, that's relatively equal, especially in terms of the daily time frame. So I still wanted to see longs play out, but I stayed patient. I didn't enter anything prematurely. I was low-key looking for a play out of this first presented fair value gap, but clearly we just ran straight through it. So there was no trade to be taken there. I didn't want to take this trade right here off this one minute rejection block either, because there's just not enough confirmation for me. And as you can see, we continue lower and we took out all of this liquidity right here. So once I saw us take out all of this liquidity here, I was a lot more open to longs. Also, the only other issue is we really have all of this liquidity to take out as well. But you can see we're getting more bullish price action here, and we haven't even taken all of that out. So in my eyes, we didn't have to take all this out. We just had to, taking out this was enough for me. So that's what I was low-key looking for. Also, I believe we had an SMT somewhere over here. I don't know if it was this low or what, but there was a low time frame SMT on there with ES. But anyway, basically what I did is I waited for 10 a.m. to open, as always, right? Not always, but as a lot of the times we do. And at 10 a.m. open, if we go in the 5-minute time frame, you'll see it right here. We get a beautiful 5-minute rejection block aligning with 10 a.m. And why is this a rejection block? Because we swept out this liquidity right here, closed above it. That makes it a rejection block. We've also tapped in to like this order block right here. That makes it a rejection block as well. And we had an SMT, like I said. So all of these things, we have an SMT, we have a 5-minute rejection block, we have 10 a.m. key open. I want to see the draw on liquidity be the daily fair value gap. I want to see us take out previous day high. All of these things led me to being bullish, right? So I literally placed my entry on this right here, just like this. Now my stop loss was not this big, but this was my entry right here. I entered on this candle here, and let me make it a little bit bigger for you guys. This was my entry, got stopped out here, and my stop loss was 25 points. And the reason why, as always, is because whenever you pull this fib from the low to the high right here, you can see 786 is right here. So you definitely want to cover the 786, but not only do you want to cover the 786, you also want to, let's go back to the 5-minute here. You also want to make sure you cover the CE of the wick. So this is the wick right here. So if we take this, put on the middle line, you can see that. Let's go ahead and turn off the background just so it's easier for you guys to see here. Boom. So this dotted line is now the CE of the 5-minute rejection block. And so I just wanted to make sure I covered that, give it a little bit of breathing room. Could have done even tighter stop loss, something in here, but I just went ahead and left it at 25 points. That was fine with, oops, holy smokes. My bad, my bad. But yeah, I just left it at 25 points. That was good enough for me. Let's see, we got entered in right here. Price was up in our favor for about 30 points. We saw 30 points of profit. I was going to go break even right here at this internal swing high. Why is it not locking? There we go. This was going to be my BE point. And I was targeting just above this for like a 1 to 5 to pass an account. And that's pretty much all I was doing. This was my trade. And as you can see, we were in profit again for like 30 points right here. Boom, boom. I guess I actually entered right up here on 10 a.m. open. 25 point stop loss right there. That was the trade. We were in profit a decent amount, about 30 points almost. And then we got stopped out. In my opinion, though, a very good trade. This is the type of trade that I want to be taking every day. And it's 30 to 50% win rate, like I said in every video and at the beginning of this one. So you're going to lose a lot of trades, but whenever you take those winners, they're going to always eat up your losses. So it's not too big of a deal. I am risking a little bit more so that I can pass these accounts quicker. And then once I'm unfunded, again, I'm just taking it slow because I've recently changed back to the strategy as I was trading different stuff a little bit, but I'm locked in on this, staying with it, and it's been working for me great. So just trying to get stacked funded right now, and then we'll be going for payouts. But yeah, that's the trade right there. Don't really need the CE on here anymore. And a lot of people were like, oh, we're looking for shorts because of, you know, those lows at the bottom near weekly open. We have these lows. And well, don't get me wrong, not a bad idea. They didn't really play out either, like from 10 a.m. You could have taken, you know, this trade here, and 0.5 here probably aligns with 10 a.m. like this. You could have taken that, but in my opinion, there's nothing really there. I like to trade rejection blocks, and there's no rejection block there to get entered off of to short that. Now, the only other trade that I did see, but again, I didn't want to take it because I wanted to see this gap get tapped into, is this 1-minute rejection block. I had it marked out on my screen. I was just tape reading it, and you could have taken this. Very beautiful. The reason this was a decent trade, in my opinion, is because we have all these relative equal lows down here. We have this low resistance liquidity, and we also we put in this high. Price was clearly losing momentum, and we reswept it, so it's damn near a unicorn model right here. Actually, I believe it is a unicorn model because we have this nice breaker block right here. Boom, nice breaker, and Sorry, I know I got a lot going on right here. We have this breaker block, and I believe there's a fair value gap in here, especially like on a 2-minute or something. So yeah, you have a breaker block with fair value gap. It's a very nice unicorn model. Once you get this closure below right here, you would just simply place your limit order on the breaker block right here. Stop loss above. So this would have been your trade. Definitely a valid trade, but not something I want to take. But it was a really good trade. I just didn't, again, like it because we had the daily gap above us as well as previous day high, which is what my draw on liquidity was. So hopefully you guys are learning something from these videos. Even though I'm taking losses here, that's like the reality of this strategy. So all your favorite influencers aren't winning every single day. And if they are, it's because they're taking a lot, like they're taking more trades and they're taking them on more accounts. Now, granted, obviously some people are going to win today whenever I lose, vice versa. I'm going to win when some people lose. So you don't want to base it off every single time making sure you're taking the same trades. It's more so making sure you have the right thought processes and you're consistently thinking for yourself and making highly educated, like you have a lot of confluences backing your trades, things like that. That's what you want to be doing consistently. So for me, this trade was 100% valid and I followed all my rules and I'm very happy with the trade that I took. I'm not upset at all about the loss because more times than not, this is going to play out in my favor. So hopefully you guys have been learning something from these videos, these recaps. Don't take too long to do, but they are very helpful in my opinion. So if you guys are trading this strategy, don't be upset whenever you take losses because that's just part of the game. So anyway, hopefully you guys caught a trade, learned something, whatever. Drop your trades, drop comments down below. Like the video, it helps me out a ton. I appreciate you guys so much for clicking on the video. But that's all I've got for today. Also, it's a no news Monday, so a little bit less probable anyway. So if you took a loss, don't feel too bad. But I'll catch you guys in the next one. I'm out. Peace.